In this video, I want to talk about looking at Yahoo Finance data from the S&P 500 to determine what stock market calendar anomalies we can see. So if we download the data from Yahoo Finance and look at specifically the S&P 500 or the index like Caret GSPC, you can get the date data, break it down into different days and months and years, and then come up with the different decades. So looking at the S&P 500 levels is what I will focus on, but you can also get the S&P volume data and then calculating the price changes from period to period, just looking at the old over the new new over old minus 1. So if we look at the day, for example, on average over the past just over 70 years, you can see that ranked in order Mondays tend to have the worst performing days. So one way you could counter this perhaps is to have market orders at the end of Monday or at the very beginning of Tuesday. And it tends to be the prices go up the most on Wednesday, so that might be a good sell day. Turning to months, see that September tends to be the worst month in the stock market. And prior to that, August is positive, but all the other months are positive besides September. So individuals trying to time the market might suggest that you sell out in August and then buy at the beginning of September when prices begin to rise, and they tend to rise the most in November. From a year perspective, the worst year on record from the S&P 500, this dates back to 1950, actually occurred in 2008. So there was a negative 0.16% daily drop. So every day that the market was open in 2008, it was falling by 0.16%. 1974, 2002, 2022 actually also was pretty bad. You can see those there. The best years that we had on record in terms of day-to-day gains were several years in the 50s, and in the 90s as well, and then a couple of the 2010s. Looking at the decades, some more longer picture here, and see that every decade was positive. The 2000s barely ended in the positive. The 90s had the largest day-to-day change. But the 2010s and 2020s, which we're currently in, are experiencing good times, even though last year in 2022, the stock market overall was down. So this is just some information you can go out and calculate on your own. Look into S&P 500. You might even want to look at other types of indices like the Dow 30 or Russell 2000 or something like that to see if these anomalies hold. But to summarize, generally the stock market, it returns positive day to day. Years, there's quite a bit of volatility. Months, September's the worst. In terms of days, Monday is the worst, Wednesday's the best. And real briefly again, months, November is actually the best, which is coming up here in a few short days. So might be a good time to go ahead and buy before prices hopefully begin to increase again. Thanks for watching.